Every single trader goes through certain stages when they start. You don't wake up and you are a stage 3 is what we call it, a profitable trader. It's going to be a journey regardless of which stage you're in. What matters is the continuous improvement from one to the next, and try to get closer and closer to that stage 3. We all have at some point experienced some sort of beginner's luck where we place a trade and that seems to just go up, and now we think that we're already in stage 3.
If you want to be a stage 3 trader, you have to have your own daily and weekend routines that you go through that inform you about ideas, that inform you about the state of the market, all of that.
Our purpose in the market and our purpose of why we're doing this has to be very clear. So with the phases of trading, every single trader goes through certain stages when they start. You don't wake up and you are a stage 3 is what we call it, a profitable trader, right? You don't wake up and you're all of a sudden the best out there, and you don't really need any knowledge and you don't need experience. There's very, very, very few people that can move from stage 1 to stage 3 in a very short span of time. So what we want to emphasize here is it's going to be a journey. Regardless of which stage you're in, it does not matter. It's what matters is the continuous improvement from one to the next, and try to get closer and closer to that stage 3. Or if you're a stage 2, try to get closer and closer to that stage 3, as soon as possible. But we don't want to discount the fact that you're going to go through each of these stages when you're starting out. In this slide, so let's start with stage 1, as I see a lot of people commenting. 1.7 is what someone's saying.
Lots of twos, yeah.
Yeah. So stage 1. Let's talk about stage 1. So I would say every investor in the market, we all have at some point experienced some sort of beginner's luck where we place a trade and that seems to just go up, and now we think that we're already in stage 3. And then what the market does is kind of, it humbles us and brings us back from stage 3 to stage 2. And then eventually what happens is we give back a lot of what we made or what was beginner's luck, and we move from stage 2 to stage 1, and then we kind of reset and start our proper journey in the market from where we felt we were stage 3 already. We're now knocked down to stage 1, and now the market's humbled us. Now we're going to go back, climbing those steps back towards 3. Stage 1 is all about, you will have small wins and you won't position size properly, and you will have larger losses, which will result in a lower low in your equity curves. And you'll see these spikes where you'll feel good about yourself. You will position size improperly, and you'll give back more than you make. And that's just the nature of the market. That's just the nature of again, the first slide that we had was you're building knowledge and you're gaining experience. And experience is about connecting those dots that you learned about. So if you don't go and study the books and the painful journeys of Nicholas Darvis, William O'Neill, and all that, Wyckoff, Mark Douglas and his books, that, all of that knowledge, if you start without that, you'll have a harder path or a harder journey to get to stage 3. The second is you'll have a negative equity curve. We've all seen it. If we go, doesn't matter when you started trading. Maybe that's something we could see people in the chat, when did you start trading? You will see, if you go look at your equity curves, they're going to be lower lows. They're going to be painful journeys. A lot of traders say the same thing, and they're always going through this painful journey to get to stage 3, and we hear the same stories over and over again. So there's a few reasons that traders are in stage 1, and we want to focus on kind of why they end up in stage 1. One is poor trade, ideas. So a lot of traders that have had successful journeys, and I'm not saying that you can't have successful journeys, let's say in the OTC market, or lower price stocks or penny stocks, etc. But majority of the audience here today, and many of you that will be watching the recording, is the trade ideas that you come up with, or the trade identification that you're doing, needs a lot of improvement, right? Your beginner's luck might have been, you just identified something, it moves up, now you're interested in the markets because you see a value proposition, very little effort and a lot of gain with one of your first trades. That doesn't happen all the time. The second is poor risk management. So we feel like we're on cloud nine, we've placed the trade, we're up 50%, and now nobody can hurt us, right? And what the market does is when it goes through its different phases, be it, a bullish market or a bear market, it will ruin all of them. All traders that don't have a proper risk management system. And we will get into the very depths of how you could create a proper risk management system, regardless of your time frame in the markets, and give you the proper frameworks so that you can move from stage one to stage two and from stage two to stage three. And the third is, lesser, it's not discussed as much, and we'll have a whole framework on it, which is selling decisions. And that is poor profit taking strategy. So our purpose in the market and our purpose of why we're doing this has to be very clear. And that's something that I encourage all of you that are watching today to kind of write out. And if you visualize, why am I doing this? Why am I spending so much time and investing so much time into this? What do I want to get out of this when I, as I read books or as I go through this journey? Your goal and your purpose of why you're doing it has to be very, very clear. What happens is the purpose gets lost. Ego takes over, psychology takes over, and you're more focused on being right instead of the purpose and the goal, which we all have the same goal at the end of the day, is to make a lot of money and move to stage three, see a higher low, and have an income from the stock market over a span of time. So your goal and your purpose, if you want to write that down, has to be very, very clear for you to be, psychologically right, thinking in the right way and be in the right mindset so that you can move from that stage one to stage two and eventually to stage three. So that's a little bit about stage one. We've all been through it. It's not, there's no, savants, for example. There might be some rare, very rare cases where mathematically people have figured out the markets. That's absolutely fine. What we're talking about here is the majority of the people will start likely from stage one, go to stage three, or think they're in stage three with beginner's luck, move back to stage one and reset and, start that proper journey. So let's move to stage two a little bit. What happens in stage two is all the pain that you've kind of gathered in stage one is packaged, and now you want to get a little bit more serious about your trading, right? You know that there are these spikes that you see and windows in the markets where things are working so well, and what Ross calls that is the market is very cooperative, and you see the progress that you're making, but you frustrate yourself where you could identify good trades, but you don't have the proper framework for you to kind of see the higher lows in your equity curve, and you give it back. And what happens is all you're seeing is this sideways chop that seems to happen back and forth. Stage two, a lot of traders that are in stage two, it's a very encouraging sign. Many people don't get to stage two. What happens is they kind of quit, leave, or are not interested in the market anymore because the market is not listening to their ego. The market's not listening to what they feel is right. The market's not listening to their political opinion. The market doesn't really even know you exist at the end of the day, right? So if you're in stage two, it's a huge positive. You could, when you make it, the probabilities of you moving to stage three almost tenfold, I would say, and you have some sort of edge in the market, and it comes down to your trade identification gets better, but you still have some principles and some frameworks. For example, poor risk management. So you might, when you're up on a trade, be a little bit more delusional, right? And now you want to all of a sudden become this investor where, you start out as a swing trader and then you just want to hold this name no matter what, and you're going to fall in love. So some of these reasons in stage two also include, profit taken too early, over trading is a big one. So not being able to identify what phase the market is in, what market cycle, is it a positive or a negative market cycle? So a lot of you that, today are stage two traders will, over the span of the next 7 Saturdays will be closer to stage three. So stage three is kind of, you hear Oliver Kell, Mike Webster, Ross, Richard, a lot of people that end up at stage three have gone through years and years of iteration and years, many, even half a decade, 6 to 7 years, is stage two type of trading. And that is perfectly fine. All they did was refine a few variables, which we call frameworks throughout these webinars. They refine them, they tweak them, and they visualize and put things on paper and make sure that they're treating this as a business, and their goal and the clarity that they have is very clear. It's not attached to an opinion. It's not attached to ego. It's attached to, I am running a business and I need to get money out of for the effort that I'm putting into it. And I need to make progress because that's their bread and butter, on the table at the end of the day. So those are, your stage three traders that take that next leap because they see a window of opportunity, that they know that they can compound if they get a little bit more serious. And they know that if they treat this like a business, that they can make a lot of money over a span of, decades upon decades, and eventually even manage money professionally, like the story of Oliver Kell recently in the markets. So that's a little bit about the phases. Any questions? Maybe we could pause here a little bit. Richard, you see how many people are stage two, stage three?
Yeah, a lot of stage twos. I want to ask you, Rai, so going from stage two to stage three, what are the important kind of realizations, actions that you need to take to make that transition? What kind of has to click in your mind to turn that performance around, and instead of just oscillating back and forth, start forming those higher highs and higher lows and not giving too much back during market downtrends and bad periods?
I think a lot of it comes down to proper preparation. Lack of opinion is actually a positive, and also just taking a look at what you're doing when things are working and how you're giving it back. So going back and kind of opening all of your stage two trades and making sure you understand psychologically what's happening in the markets with the setups. There's the mechanical side and the psychological side. Both have to come together for you to be a stage three. So for example, you miss a trend, right? Now, are you chasing, or have you kind of bridged all the knowledge that you have with the experience in stage two and connected the dots properly to a point where if you were to miss a cycle, you don't go and chase, you just sit there because your goals are very aligned to the progress that you need to make, rather than be in a situation where you're continuously feeling right at the back of your head so that your ego feels good. That's stage two, right? You when you go and chase and you overtrade, you give that back because the market is in a proper pullback, and it's doing what it's supposed to be doing, but you feel that you need to be in the market and be trading all the time. That's what kind of is the gray area between stage two and three. There's a lot of these small factors that line up, but the ultimate one that Nick Schmidt will tell you is also psychology plays a big part of it. Psychology and experience. So over a span of time, when you're going through these stage twos, you'll bridge, experience will come in to play, and psychology, you'll figure that those two components will really allow you to step it up when you feel like you've missed something, you experience FOMO, etc. Many of these factors, which we'll get into in the next slide. So
yeah, so just to reemphasize what you said, a lot of it has to do with how you're aligning your actions with the market cycle and being in tune with that, right? Because stage two traders will try to do the same thing all the time, right? Even when the market is in pullback mode, they're still trying to buy, all these breakouts that are being sold into. They've found something that works during uptrends, but they keep trying to do that same thing during downtrends and corrective periods. Is that kind of what you're?
Yeah. I mean, so it all comes down to, let's say, do you have, if you have a trade identification system, what does that take into account, right? Does that take into account external opinion? Does that take into account your own, homework that you're doing on a day-to-day basis? I think a lot of this is a very personal journey that you have to go through. Yes, you can follow. Yeah, when you're building knowledge, it's about seeing what others are doing. When you're building experience, at that point, it's tunnel vision. You've listened to people, you know what they're doing to be successful, But at the end of the day, when you're building that experience from, you know, week to week, month to month, quarter to quarter, market cycle to market cycle, that has to come from within, right? You have to look at your own numbers. You have to come up with your own list of stocks that you want to be trading. You have to maybe, you know, even if you're in stage two, you identify stocks and maybe compare your homework, right? With someone else. So you're not borrowing complete, you're not, you know, waking up on a Sunday morning and just completely consuming someone else's pivot and with no level of understanding of how they might be viewing it in the markets. So that's where I think stage three traders, they take what they've seen, they take, you know, they leverage some of that experience, but they make it their own, right? When you make it your own, it's a whole different ballgame. You think differently, you can make your own decisions, you have your own opinions, which I feel is very important. And then you could go from market cycle to market cycle and say, hey, I was thinking, you know, this market is about to go south, and it actually didn't do that. So how am I going to do that? You know, how am I going to analyze that a little bit differently? I took this trade at this pivot, even though the sector, let's say, or the industry or something, some factors were not, you know, going for me. How can I kind of visualize that, put that on paper, or really have, you know, a system before I buy a trade or as I try to, you know, get into a trade? How can I improve that for myself, right? So you're not waiting on anybody else, you're internalizing a lot of that for yourself. That doesn't mean you don't leverage experience. I think leveraging experience, but comparing, right? You're comparing what you think is a good trade and maybe looking out and saying it's our, you know, someone else that I value from their opinion watching this as well. That gives you a little bit of confidence, but at the end of the day, your decision making has to come from within. It can't be someone else's decisions that are thrown upon your trading. So
Yeah, to put it kind of plainly, if you want to be a stage three trader, you have to have your own daily and weekend routines that you go through that inform you about ideas, that inform you about the state of the market, all of that. And we're going to cover that in a later webinar, how to set that up. And also just from stage two, you know, all these stages, you have to approach this as being a student. You have to be open to improving every single part of your trading system. You're not going to be the same trader as you were 3 years ago. You want to consistently improve, tweak your system, adapt to what's working, all of that. And that's really the mindset shift that you need to take, because a loss is a learning experience. You can learn so much from a loss. Maybe there's just one simple risk management tweak. That's the difference between stage two and stage three. But if you don't ever take a look at your trades and chart them up, you'll never find it. So you have to put in the work and study yourself, study your trades, study the past as well. We just did the historical analysis masterclass with John Boyk. You can learn so much from what's successful in the past, what legendary traders have done, what model stocks, how they perform. So a lot of this is just being focused on learning. And that's what you guys are doing right now, right? You guys are attending this, putting in the work. But again, there's knowledge, and then you have to apply it, right? And actually see results. Yeah, I think that's all I wanted to say.
awesome. Let's go on to the next one. So that what we spoke about right now is basically the evolution of a profitable trader. A profitable trader starts from stage one, goes to stage two, remains in stage two, I would say, for a couple of years at the very minimum. Some people figure out, you know, I'm not serious enough, I'm not doing my routines properly, I'm relying a little bit too much on someone else telling me something, for example, in a chat room or social media, right? You get just a little bit more serious as you go from stage two to stage three. You're internalizing in stage three, and that journey from stage one to stage two to stage three, for me personally, it took me 7 to 8 years. I'll say I'm a slow learner, right? I started trading with, I would say, I've done the volatility trade only. I've done the have had a lot of interest in the forex market. I've had a lot of interest in the commodities market, which is, I feel, is the toughest one. And that was a journey I kind of went through to move from stage one to stage two. A lot of failures that you experience, right, within those different market types. And then eventually you stumble upon it, just, you know, as you put in hard work, you know, just the nature of how things are with our lives, you tend to stumble upon people that you feel have helped you a lot more, or take you from stage one to stage one to stage two, and then there are people that take you from stage two to stage three. So this evolution, there's no guarantees that you will start from stage one and move to stage two to stage three over the next 7 webinars, I would say. I think that's a very, it would be foolish of us to say, it would be dishonest of us to even say that. But the hard work that you put in, and you learn and look at your failures to make sure that you go through that evolution, and you hit stage three over a span of time. For some people, our whole goal here is, it took me 7 to 8 years, maybe even more, but we want to have these kind of talks, right, over the next 7 weeks, to kind of compress that timeline as much as we possibly can for the people that are here to kind of take the knowledge part of it, and then go out and go build your own experience, bridge that knowledge, connect that knowledge together through experience.